If you're a YouTuber, you're a social media creator, and you're not using these three things as tax write-offs, you're missing out on potentially thousands of dollars come tax season. These are the first three, but I do have some more, so if you want to see those, hit the like button, subscribe to the channel, let me know in the comments that that is something that you want to see to save yourself some more money, stop paying the government as much as they would like. Let's get into number one, which is mileage. Unless you live in a major city and you don't own your own car, you're likely driving a lot. Actually, a lot more than you know. And all of those miles can pile up, especially if you're able to write them off for business use. For 2023, the business mileage rate was 65.5 cents per mile. That means for every mile that you go, you can write off 65.5 cents a business expense, as long as that drive is applied to a business purpose. Obviously, this is a huge thing if you're making long trips, 200, 300, 400 miles, you're doing road trips for business, but not all creators do that. It doesn't mean that it's useless to you. See, as a YouTube creator, if you take your camera with you, or you're going somewhere to film something, or you're going to get supplies, all of those trips can be written off as business expenses, and all of those little trips do add up over time. Even if you're not going 100 miles at a time, well, if you take 10-mile trips, you're already up to $65 in write-off. That is an absolutely massive deal. Now, you can go through and manually log all of these miles, which is something that I've done in the past, or I've gone back and kind of guesstimated everything, but that process is really a pain in the butt, and it gets kind of complicated. So for this new year, what I've been using is an app called Mile IQ. This is not sponsored by them whatsoever. It's just a very useful tool, and it automatically logs all of your drives, and after you do that drive, you can select whether it was a business drive or a personal drive, and they put together a whole sheet of accountability so that if the IRS does audit you, you can supply that sheet, but you can also accumulate all of those miles for your own reference when it comes time to file your taxes. So don't sleep on your mileage expense. This is something that a lot of people take for granted, and they're losing out on thousands of dollars worth of write-off by the end of the year. If you have been writing off mileage, awesome, good for you. If you haven't tried that Mile IQ thing, I totally recommend it. It makes it super easy. Again, not sponsored at all, but I just think it's a very good tool for you. Let me know how many miles, if you have been writing off mileage, how many miles are you writing off this year? How much money has this saved you? It's a big number. Okay, moving on. The second category that a lot of people forget about, and you can kind of, you can play the system with a little bit, is office supplies. Because if you're a YouTuber, you're a creator, you're likely working out of a home office. We don't need a ton of space to do this sort of thing, whether it's a podcast, a YouTube channel, Instagram. It's very easy to tie those expenses in and not have some sort of external office that you have to supply. At the same time, you have to keep your house running. You have to have a studio in your home, and tools that you use in this home office, whether that be paper, staples, pens, sort of like normal office supplies, that all of course can be written off, but also some other things that are normal expenses, normal categories that offices would need to supply, like cleaning supplies, toilet paper, bath tissue, soaps and cleaners, that sort of stuff that you're using in your home. As long as the expense is reasonable and necessary, you can write those off as a home office expense. But when it comes to these things, one thing that you really just have to remember is keep your receipts, because even though it is highly unlikely, unless you're doing something that sets off alarm bells, the IRS can audit you at any time, so you want to be prepared for that. It's best if you can put these sort of expenses on a business credit card or a business debit card, because you should have a business LLC that you're running all of your YouTube channel or social media account business through. It'll make all of this way easier. So if you can put it on a card that's linked to that account, it's way easier to keep track of all of your expenses and to show accountability for what they are, and saving those receipts becomes a much simpler process. If you don't have something like that, or you're putting them on a personal card, make sure that whenever you are using that expense, you're filling out an expense report, keeping track of that, saving it in your files, linking that expense report to a receipt of the actual expense, before you reimburse yourself from your business bank account to your personal bank account. You need to have some sort of paper trail for the IRS to follow. It becomes a pain in the butt, which is why I recommend having a business credit card or a business debit card that you do those expenses through. But just know that if you aren't keeping track of these expenses that you're putting on your personal card and it's business expenses, it will be an absolute nightmare come tax time. So keep those expense reports, keep everything, all of your ducks in a row. It's not going to be a problem. And the third category here, and probably the second greatest when compared to mileage, I'd say it's mileage and then this one and then office supplies. This third category is writing off portions of your phone and internet bills. I mean, every business has a need for internet and cell phones nowadays. It is the 21st century. But especially as creators, where our entire livelihood relies on having an internet connection, being able to upload and download and edit and communicate with sponsors and affiliate program, like it is so integral to our business model, and we do require sometimes higher, greater speeds than the normal person. This write-off becomes quite powerful. And this is from TurboTax, okay? So if you're self-employed and you have your cell phone for business, you can claim the business use of your phone as a tax deduction. So you have your personal phone and you use it sometimes for business, you can claim those hours or minutes as a business deduction. Now, if 30% of your time on the phone is spent on business, you could legitimately deduct 30% of your phone bill. That's sort of how it works. It's not that you can deduct your entire phone bill for business when you've only talked on the phone for 1 minute out of 2 hours of your phone bill time, but you can do the proportional percentage amount of your bill. Here it says they recommend getting an itemized phone bill so that you can measure your business and personal use and prove your deduction to the IRS should they come knocking. That is totally the safest way to play it. It's always good not to run any serious risks when it comes to audits. But alternatively, you could also get a separate business phone and then write off all of those expenses completely, everything on that business phone as purely a business expense, 100%. As long as you only use it for business. Similar to the phone bill, if you've got an internet bill for your house that you're working in your home office, you can write off a percentage of that internet bill according to how much of that internet is being used for your business. It gets a little complicated here. It's not super cut and dry. It's harder to have an itemized internet bill that tells you exactly how many minutes you're spending on business sites, and so you kind of have to keep track of it yourself. But I think the simpler way to go about this and to prove that it is a legitimate business expense, because of course when it comes to audits and being careful about not committing tax fraud, you just need to be able to sort of reason with the IRS and show them that it is a legitimate expense. The easiest way to do this, I think, when it comes to the internet bill is, say, if you're at home and the average person, you could get by with a $55 a month, 300 megabits per second internet plan. But because you're a YouTuber and we do so much intense internet work, maybe you need a 1 gig speed, a super fast fiber speed to upload your videos in a timely manner and keep your efficiency and your workflow going. And that super fast plan would cost an extra $25 a month. Now you could go and say, try to work out how many minutes on the personal plan or whatever, and that would be way too complicated. But on the other hand, you could just say, okay, well, personally, I need this 300 megabit per second plan, and it's $55 a month. If I get the 1 gig that I need for my business, it's $80 a month. So that $25 difference, that is the business expense. And you can write off that extra $25 a month as a necessary business expense. Now, I wouldn't go overboard with this. I think you're going to have a very hard time proving to the IRS that you don't need home internet because basically everybody does. Now, there's some people that don't. Like my girlfriend doesn't have home internet. It just doesn't use it, doesn't need it. And there are people out there like that. You don't need it. But when it comes to audits and trying to prove it, I think you'd have a very hard-pressed time telling them that you can get by without internet. in today's day and age. So don't go overboard with it. I wouldn't write off 100% of your internet bill. It's going to raise some red flags, but for reasonable, proper audits, proper expenses, it is a completely valid and very powerful way to write off some more of your business expense. And in the end, write off absolutely as much as you can without committing tax fraud.